Ladies and gentlemen, welcome once again to Blockchain World 2.0, your weekly guide into the fascinating world of blockchain, cryptocurrency, and digital innovation. This program is proudly brought to you by Diaspora Digital Media, DDM, in partnership with the Digital Assets Management Academy, DAMA, the leading hub for blockchain education, training, and mentorship, right here in Abuja, Nigeria. Today, we are tackling a global economic issue of local impacts, how a US Federal Reserve interest rate cuts affect cryptocurrencies. Why does this matter? Because what happens in Washington, D.C. does not stay there. It ripples across global markets, shaping the value of the dollar, influencing investment decisions, and directly impacting the world of crypto. For traders, investors, and enthusiasts, understanding this link is crucial to making smart financial decisions in today's interconnected economy. And to help me unpack this timely conversation, we're joined by two outstanding voices for DAM. As usual, Mr. Moses Obaje, popularly known as AI Prof, a blockchain and AI strategist. You're welcome to Blockchain World, Mr. Moses Obaje.
Thank you, Mr. Ibrahim, and good morning to all our audience. It's a pleasure once again being on this channel this morning.
Thank you once again. And also, we are joined by Mrs. Shipra Puluma, our digital mama, a trusted guide in navigating safe and profitable participation in the crypto space. You're welcome, our digital mama, to Blockchain.
Thank you, Ibrahim, and to all our listeners and viewers, good day.
Thank you, Ma. With their expertise, we will explore how shifts in monetary policy could determine the next big move in the crypto market. So settle in, take notes, and prepare for another thought-provoking session of Blockchain World 2.0. So for those new to this topic, what exactly is an interest rate code, and why does it matter so much to global financial market? Mr. Moses Obaje.
All right. Thank you, Mr. Ibrahim, and thank you to our listeners this morning. Just like you rightly said, we are looking at the implications of interest rate cuts by the US Federal Reserve on cryptocurrencies. But before we even dive into cryptocurrencies, there are some things I just want us to understand, which are the basics. We need to understand the US Federal Reserve itself, since we are looking at the implications of the interest rate cuts that just took place some few days ago. So let's understand the Federal Reserve itself. Often it is called the Fed. Now, the Federal Reserve is the central bank of the United States. It was established in 1913 with the goal of ensuring financial stability within the American country. However, it has three main parts. Number one, it has the Board of Governors with their headquarters in Washington, D.C. Then we have the 12 regional Federal Reserve banks spread across the whole country of America. And most importantly, we have the Federal Open Market Committee. And this Federal Open Market Committee decides interest rates and manages the supply of money. That being said, what is the responsibility of this Federal Reserve? Now, the Federal Reserve has four key responsibilities. Number one, they are responsible for conducting monetary policy. Number two, they are responsible for maintaining financial stability Number three, they are responsible for regulating banks or bank operations. And then the last is that they are responsible for overseeing the payment systems. Now, having said that, I want us to understand this morning that the US dollar is the world's reserve currency. So whatever decision that is taken by the Federal Reserve of the United States don't just affect only America, but it affects the entire global economy. It affects the entire global economy. So whatever decision the Federal Reserve takes, it's just as if it is taking it on behalf of the global economy. So the question now is, why do they cut interest rates? Why does the Federal Reserve cut interest rates? Now, typically, the Federal Reserve cuts interest rates when it wants to stimulate the economy. Maybe the economy is slow in its dealings. Okay, the economy is crawling. They tend to cut interest rates so as to ginger the economy. Let me use that language, so as to stimulate the economy. And how do they do that? They lower interest rates so as to make borrowing cheaper. And because borrowing becomes cheaper, businesses can invest more, and also consumers can spend more. As businesses expand, so also consumers, since there will be increase in liquidity, they tend to spend more. So the overall aim, or the overall focus of this course, is to encourage growth and to avoid the economy going into recessions. But these decisions don't just impact banks alone and businesses. They spill over to all asset classes, including cryptocurrencies. So that is what these cuts are all about, to stimulate the economy and also to try as much as possible to see that the economy does not go into recession. Thank you, Mr. Ibrahim.
Thank you very much, Mr. Moses Abaje. That's insightful. Could you break it down with a simple example? I mean, how a Nigerian trader saving in dollars might feel the difference after a federal interest rate cut.
You see, that is another facet of its own. For you being a Nigerian and doing business and decide to save in another currency, you are not doing well to your own economy. Having known that, yes, it is the reserve of the global economy, does not mean you as an independent businessman should go and save, just like the right word you used, saving, right, in the American dollar. But though I do not blame some businesses because of the will I say, the volatility of the currency of the said country, which is Nigeria. Okay, but however, now when there is interest, if once there is rate cuts, the interest gained in transactions is reduced. It's reduced. It's drastically reduced. Let's assume you are making $100 interest maybe per day, or $1,000 interest per month. By this interest rate cut, you cannot achieve that $100 per day or $1,000 per month. The interest rate has been reduced by this rate cut. So that's just a practical example. You understand? So you will not get that same interest you've been getting previously because of the rate cut.
Thank you very much, Mr. Moses Obaje. Our digital mama, I'm coming back to you. Do rate cuts make crypto more attractive compared to traditional assets like bonds and savings?
Sure, they do. Because anytime there's a rate cut, normally what happens is that investors are looking for safe havens where they can get, more interest in, they like to leverage, because when there's an interest cost cut, based on the sentiment generally is that the yields, of investments increases. So the most safe haven is the generally investors look at cryptocurrency as digital gold. So their shift gets there for them to get, higher returns and higher dividends on their investments, So most often than not, you discover that the price affects the crypto positively, though sometimes it's for short term. Yeah, because of the, the news, when it blows up, everybody is expectant and people are being pushed, you understand? Because of the, like Prof said, when he made that example with somebody investing in dollar, for example, in Nigeria, after this interest cut, he doesn't expect to get a higher interest. Maybe he's expecting, he has invested $1,000, expecting more. It will now drastically reduce. So the safe haven for most investors is that they would rather like invest in crypto because they know that in as much as, yes, it's risky, but it looks like a safe haven because it is digital gold. Thank you.
Thank you very much. Historically, my understanding of this interest rate code is that in a capitalist society like the United States of America and of course Nigeria, when after some certain years there is an economic downturn that will force the government to make that interest rate to acclimate with the reality. So I know definitely previously there was a scenario like this. How have cryptocurrencies like Bitcoin and Ethereum reacted to previous US interest cut rates?
In the previous years, the historical context is that the past cycles during Fed cuts, for example, in 2020, it was near zero. So that was when we saw Bitcoin rising from $7,000 per Bitcoin to about $28,000 by year end of that 2020. And this was just driven by the liquidity floods that came into the market. And even in the year 2023 to 2024, as rates peaked and then they eased, crypto boomed, though, and rallied around 150%. And generally, the market in the crypto industry was fueled more by Bitcoin and Ethereum. So that's where we see the scenario as in historically, it has really affected, and whatever the information is out there. So thank you. I can't hear you.
All right, thank you, our digital mama. That's interesting. Mr. Moses Obaje, do you think those reactions are consistent enough to predict how the market might behave this time?
There are sentiments. There are sentiments. In as much as there are certain mechanisms of how rate cuts affect the crypto space, because like I rightly mentioned earlier, when the Fed lowers rates, borrowing becomes cheaper. Now, that tends to increase liquidity, the cash flow in financial markets. All right, banks have a cheaper funding, people are much more willing to borrow. Now, most money floating around often encourage risk taking. Where do I go, all right, so that I can do much more better? In as much as the rate cuts will not make you get much more interest in centralized businesses. Now, people look at speculative assets, just like the crypto space. So definitely there's that tendency that there will be that surge because people have money in their hands. They can access monies on low rates and at the same time look at how they can build on that money that they have access to, knowing fully well that in the centralized systems they might not really get what they want. They now look at high risk investments, just like cryptocurrencies. Now, interest bearing safe assets like treasury bills, like short-term bonds, become less attractive when interest rates drop, just like I rightly said. Thus, the opportunity cost of holding non-yielding or low-yielding assets like Bitcoin, like Ethereum, also falls. Why do they fall? Because if we look at the market capitalization of Bitcoin, Ethereum, they have grown so large, so massive that yes, you might make some little gains, return on investment, but they are still low yielding assets now compared to altcoins, to alternate coins. So investors might shift portfolios towards high risk and high return assets, which are cryptocurrencies that have low market capitalization. So yes, it is bound to happen over time. Just like the child mama said, it might be short term, all right, but at the same time, it might be long term if the government, if the Fed is still looking at further rate cuts in the future. Because there's that anticipation now that more rate cuts will eventually come into play before the year runs out. No one can tell. So if that is being envisaged, that means the bullish market we are looking at because of this rate cut might take a longer period of time than just being a short term. But like I said, it will focus more on high risk investments that offer high risk returns. Thank you.
Thank you very much. That's interesting. So, now I'm more interested in making money. So, sir, how can one position themselves to take advantage of potential crypto market reactions without falling into risky speculations?
You see, I will always say it and I will continue to say it. You don't just venture into what you don't know. Because now that we are talking about this rate cut, people might be, okay, we're talking about the cryptocurrency space. People might be tempted to go into the space to go and put in their resources because they want a return on investment. But it all boils down to knowledge. What do you know about the space? I just mentioned altcoins. What do you know about altcoins? I just talked about the low yielding assets like Bitcoin, like Ethereum, like XRP, and the rest of them. Now, if you do not know the terrain and if you do not know all these narratives, you might decide to go and take your hard-earned money and put in Bitcoin, thinking that Bitcoin, that is digital gold, right, will give you the necessary return on investment that you are looking at. But the truth of the matter, it is not like that. You just need to be knowledgeable to know where to put in your resources. And knowledge is key. Knowledge is key. So if you are looking for a low yield investment that is more or less not too risky, yes, you can go for the big bulls like Bitcoin, like Ethereum, and the rest of them. But if you are looking for a high risk and then high investment return, you have to look for tokens or assets that are having low market cap, that is community driven, that has a very good use case. What problem has it come to solve? So all this boils down to knowledge, and that is what we at Dama are out to do, to give out this knowledge. In fact, we give it for free. That's why we are on this space this morning. We give it for free so that people will know where to invest. Even if you are coming into the space as a newbie, you should know where and how to invest in the space, that you will not get your hands burnt over time. Just like she rightly mentioned, if it is short term, and then you come into the space at the tail end where the short term is coming to an end, and then the market now has a downturn. Instead of making more, you tend to lose more in the market because of demand and supply. When the market retraces, instead of you, it's either you stay at equilibrium, or you lose. So all these things need to be taken into cognizance for those who want to come into the space. Seek for knowledge. Seek for knowledge. Make consultations with experts in the space so that you take the right decisions when making investments. Thank you.
Definitely, Mr. Moses Obaje, the importance of knowledge in our today's interconnected world can not be overemphasized. And you mentioned about opportunities and, of course, the risk. I would like to bring our digital mama. Could you share one practical step retail investors can take immediately to prepare for potential shifts after a red card? Our digital mama.
Yeah, please, can you come again?
All right. I said, Mr. Moses Obaje talk about opportunities and risk. Could you share one step retail investors can take immediately to prepare for potential shifts after a rate card?
Well, after a rate cut, I think, like Prof said, honestly, it boils down to knowledge. Because there will always be a forecast. And the market sentiments, the news could blow, whereas what will happen in reality might not be, or might be, like I said earlier, short term. So if one is not knowledgeable, honestly, there's a problem. When you follow the sentiments, follow the market, follow the news, at the end of the day, you might end up losing, or you might end up being lucky enough to gain. I will give you a typical scenario. During this recent rate cuts, Bitcoin rose from 115,000 US dollars to about 117. So you can see that the increment or the effect is not really much. And then now it's rallying. And it has virtually affected the entire system itself. When you look at the crypto portfolios now, we are in the red as it is. A lot of assets are in the red, have dipped. But that being said, in as much as yes, they have dipped, the potential area that one should look at, like Prof said earlier, is assets that have low market cap with good use case. They must fit into the narrative. They must fit into the perimeter so that you will not just go and be pulled. That is what we offer here. So any asset with low market cap that fits into the narrative of being a good gem, that's where an investor should look at. And in the course of looking at it, the bottom line is that the use case will now give you a forecast or a foresight as to whether that very particular investment is going to is a long-term investment or short-term. Then you will be able to pull out of the market depending on the knowledge that you have. Thank you.
All right, but you talk about knowledge. I want a clear explanation of how someone, yes, definitely this type of program and engaging in community groups will give someone the knowledge. But we're talking about a specific incident that just happened. And you know, people sometimes they are victim of falling into this type of bandwagon because of greed or something like that. I want you to be specific on the advice you give people like us that are newbies in the crypto space. When we hear about this news, how are we going to navigate through it without being victim?
Basically, in Dama, we have classes that we offer free. And for anyone that is in our groups or would want to be part of us, we'll share the links to all our various WhatsApp groups and Telegram groups so that you get ample, adequate knowledge. This adequate knowledge that we offer made us to even, the students in Dama were able to, detect a coin that fits into the narrative of a good gem. That's the body scan here. It fits into the narrative because it is low cap. The use case is universal, meaning it's going to cater for the health of humanity. So it gives you an insight that, yeah, this token is going to go spaces, is here to last. That's just basically it. So when you join our classes, armed with the knowledge of how to detect a good gem, low cap, it should have a low market capitalization, it should have a clear-cut use case, it should have a real community behind that project. And then at the same time, the project should be fair launched, not when a dev creates a coin or a token, decides to give himself a location that is higher, then dumps it on the community. So when you have this insight, because this insight is just clear cut, as we are in the academy, we'll give you practical lessons as to how to navigate all the aggregators, whether it's CoinMarketCap, whether it's DEX tools, whether it's, all the aggregators that we have, how to navigate via them to be able to detect all these parameters are there. They are simple to understand. They are not really difficult. You understand? So I think for any newbie that will be joining us, it is very, very key for you to be part of us so that you get this knowledge. Because this knowledge is not, I can't give you all now because it will take us a long time. It will require us to have even practical sessions now. But then when you join the academy, you will see will give you the nitty-gritty of what it takes for you to identify a good gem. And once you're able to navigate through that, I mean, sky will be your starting point.
Thank you very much.
Because you navigate this space effortlessly.
Yeah.
Yeah.
So our participant, don't forget you are part of this conversation. If you have any question, drop it in the chat and it will be addressed. The floor is yours. Drop your question in the chat if you have any. So, Mr. Moses Obaje, beyond the immediate effects, do you see a world where crypto become less dependent on traditional monetary policies like this federal decision?
Yes, the answer is yes. Because let me go back to why is Naira accepted in Nigeria? And why is dollar accepted globally. It all boils down to what is called adoption. It all boils down to adoption. Because now it is because Nigeria agreed that Naira should be a means of exchange for goods and services. That means Nigeria adopted Naira as a means of exchange for goods and services that Naira is being used. And it is because the global economy accepted dollar as a means of exchange for goods and services that it is accepted globally. So in as much as this global space is coming into the cryptocurrency or the blockchain ecosystem, I bet you over time, fiat currencies will be of minimal sought out with regards to digital assets or cryptocurrencies. So it all boils down to acceptability, which is adoption by the world. And like you see what is happening presently, governments of the world are tilting towards cryptocurrency as a means of exchange. You understand? El Salvador, like we all know, you understand, their focus is now cryptocurrency. The American government also is basically tilting towards cryptocurrency. Even in Nigeria, if you heard of recent, they are saying they want to tax those who are making money from cryptocurrencies. So the global space is tilting towards that direction. In as much as we know that it is a decentralized system, there are some hiccups that yes will come, but over time, as people get more knowledge, people get more understanding, people get to start using these digital assets more frequent, more often, it will tend to get more traction, more acceptability, and the world will all key into it, and it becomes the talk of the global economy.
That's a powerful point about local impacts. And you talk about the role that crypto is playing in global economy today. But do you think African government themselves might need to start paying closer attention to federal decisions when crafting their crypto policies?
You see, I don't know how to put it, but it is going to be quite challenging for the African continent. Why do I say so? Is we as Africans, we are not looking at where we ought to look at. I'm sorry to use that language within this ecosystem. Now, there is what battered cryptocurrency. What battered cryptocurrency? That should be our main focus, because cryptocurrency is not just emerge. There was a technology that brought cryptocurrency to limelight, and that technology is the blockchain technology. Without blockchain, there won't be cryptocurrency. So the government needs to understand this first. They need to understand what is blockchain. Blockchain is decentralized. Blockchain is immutable. Blockchain is secured. It's an open ledger. You understand? So they need to understand the terrain first before they even look at what it gave back to. It is not, blockchain is not only for cryptocurrencies. Now, you can see that even in the health sector with body scan AI, blockchain is embedded into the health sector. Finance, yes, using cryptocurrency, decentralized finance, blockchain is in it. Look, even in the centralized system now, blockchain is coming into play, making centralized systems become decentralized systems. even in the banking sector that we have today. So let not the government look at the baby of the the baby without looking at the parent of the baby, so that they can make optimal use of the parent rather than the baby, because there are more benefits attached. They say what an elder sees while sitting down,
Sure.
the baby, whether he climbs the top of the mountain, he will never see, or climb the top
Never.
of a tree, he will never see. So for them to understand what cryptocurrency is all about, they should go back to blockchain, the technology itself, so that it will give them a clear view of what the technology is all about and how it can affect the economy, not even the digital currency they are talking about, positively. In fact, we need to see how the African continent can begin to use this technology effectively, even in our voting patterns, in our electioneering system.
Sure.
Let the world begin to understand that, yes, Africa is becoming more robust in technology, in integrity, because that's one of the greatest challenges that we are having, even in this space, integrity. So Africa should begin to look at how this can come into play, not just looking at cryptocurrency. Cryptocurrency is a baby of the blockchain. There are other aspects that they need to look into to better the economy, to better the continent itself. So that's what I have to say in that regard.
Powerful, powerful. Before we go to the next question, there is a question to our digital mama. Someone said, Nikki said you mentioned a word that he wants more clarity on. He said, please, what do you mean by the word rallying?
And I would have loved her to put the context with which I said. When things rally, meaning they revolve around.
Yeah, I think it's just the word that he wants to know. Or maybe he thinks there's a technicalities behind the word.
Behind the word. No,
yeah, maybe.
Really meaning revolve around.
Digital Mama was talking of rally. Okay, may I come in here? Will I say she's talking about consolidating?
Yeah.
The market is consolidating now at a certain price, so it rallies around that price. You understand? It will do as if it is going up. It will do as if it will come down, but it is within a certain range. It's rallying within a certain range. So another word for that rallying is consolidation. You understand? It is consolidating within a specific range. That's what I think digital mama, because I know she was talking about the uptrend of Bitcoin and also the retracing of Bitcoin. Thank you.
Thank you very much, Mr. Moses Obaje. With regards to integrity, Mrs. Boluma, we talked about it last week, and I want us to revisit it again. What is happening to us in Africa? This issue of integrity. We are creative. We have everything at our disposal, but we lack leadership. And should I say these leaders are poisoning the society, most especially people of my age, to look at corrupt people as their, should I say, role models. So what are the practical steps that we are supposed to take, most especially in this ever-changing world, to change the narrative at least for the future of Africa?
I think as Africans, like I said the previous week, they say charity begins at home. Because you can't get charity outside. If you don't have it at home. So it boils down to us as individuals, I'll still repeat, as me and you, if we decide, it's a choice, if we decide to, check our conscience and then work on ourselves, that we don't want the status quo to remain, will be a force to reckon with. It may not be immediate, because if I do the right thing in my own little corner, and then my neighbor is not, that shouldn't influence my decisions. I should stick to be me, to what I've chosen to be. So trust begins with self-examination, with me. If I trust myself, and it doesn't matter what the other person is doing, I will remain focused. So if we have people focused like that, for example, in the blockchain world, honestly speaking, there were so many things that were happening, scams everywhere and what have you. Dharma Academy has come to change the narrative. Dharma Academy has come to change the narrative, because the knowledge we offer makes, I don't need to ask, consult even other tutors in the academy. I can sit down here, check the tokens that are coming out daily, make informed decision, and decide to invest. You understand? Based on the knowledge that I have. So it boils down to us as individuals. Search yourself, search your conscience, do the right thing, and enforce that on members of your immediate environment, because it starts from there. Don't do as I do. Do as I say, but I will act what I say. So when I do it myself, I believe in myself, the members of my immediate environment key into that. I think with time, the world will become a better place. So in Africa, we should try as much as possible to destroy this gratification thing, because we believe in certification. The certificate has eaten deep into our consciences, that everybody feels, if I have a certificate, that's it. When we look at Mark Zuckerberg, look at Bill Gates, they are school dropouts. But because they had initiative, they had creativity, they were creative, and the environment around them enabled them to, maximize their creativity. We are where we are today. They are where they are today. So we as individuals, we have to take informed decision. We have to decide, make a choice to do the right thing. Make a choice to influence people around us. And the circle will keep growing. The circle will keep growing. And one day will be a movement. As I tell you now, Dharma Academy is a movement. It's going to be a movement. Because we're rallying around, collaborating with others in the industry. And that is why we have an outfit now called African Blockchain Advocacy. We are going beyond Nigeria. We are going beyond our immediate environment to now advocate to Africa how we wish and we know we'll make our mark. Even with the incoming of the issue of taxation that government said is going to tax whatever, cryptocurrency, investors. Well, we want to see how they can. But the bottom line, like Prof said, let us look at the parents. What benefits would we get out of the parents? Not just a single item, crypto. No, just the fintech. They are looking at the monetary aspects, whereas there's a lot that blockchain can offer. Even our voting system, we can make it perfect, thereby destroying all this monetary gratification that politicians give, and then they feed the less privileged people with drugs, they become drug addicts, they have become thugs and what have you. We can minimize that or even completely destroy that when we blockchain our elections. Thank you.
Thank you very much, Digital Mama. To our audience, if you have any question, don't forget this is an interactive session. Drop the question. And thank you, Neki. Thank you. Mr. Obaje, I think from integrity, I'm going to shift gear to market dynamics.
Okay.
I wonder, could a sustained low interest rate environment fuel another bull run in the crypto space?
Come again. I did not get you clearly.
I said, could a sustained low interest rate environment fuel another bull run in the crypto space?
Well, in economics and in governance, we will not say cut rates should be a continuum.
No.
In as much as the government is cutting rates, there are times they need to also increase these rates. Now, let me make you understand this. Lower interest rates, right, leads to a weaker dollar. Having known that the dollar is a central means of exchange to the global economy, lower interest rates can lead to a weaker dollar. All right.
Yeah.
So, because lower yields make dollar denominated assets less attractive to the foreign capital, so it can make crypto more appealing as an alternative store of value. People want where they can have better return on their investment. So, however, it causes a higher risk and appetite speculation, just like Digital Mama rightly said, because lower rates often encourage investors to reach for yield, meaning riskier assets. Riskier assets, which, like I rightly mentioned, includes small cap altcoins, right? Decentralized finance tokens and all of that may benefit from this. Now, also the volatile corner of the markets, cryptocurrency market is a volatile market, can see white hot speculations, specifically if, excuse me, if liquidity is abundant.
Yeah.
If liquidity is abundant, because as people come into the market, others are also exiting the market.
Exactly.
And as they are exiting the market, there will be that volatility, outcome, incoming, outgoing. So there will be a very high level of volatility, and it has its own negativity also. So, whereby also, let me bring this also to our knowledge, because with this rate cut, we have stable coins, all right, just like a USDC, the USDT. Now, this will cause a decreasing yield. I will break it down. It will cause a decreasing yield on stable coin reserves, because we have what is called just like we have the Fed Reserve, Abi. We also have these stable coin reserves. Now, like I said, let me break it down, because many of these stable coins that we have, and many crypto firms, I bet you they hold US treasury bills or similar interest bearing assets within the global economy. So, when these rates fall, when there's decrease in this rate, the yield or the income generated by these stable coins also declines. And because they are declining, they will squeeze margin. Let's say the earning margin is 10%. Now there is a rate cut. Now the earning margin can now be compressed to maybe 3%.
Yes.
You understand? So this will reduce incentives, and it will even push some of them to take more risk. More of these crypto firms, more of these stable coins, they will want to take much more risk to maintain their income levels. And as they take much more risk, I bet you the markets will continue to explode to an extent. It will cause the altcoins to become much more bullish, in as much as these strong firms, all right, the OGs, the dons are coming into the space so as to manage their also interest rates. They come with huge investments into these high risk portfolios, which are the more of alternative coins, and this will cause the market to be much more bullish. Now, in as much as this is happening, there is what we call signal effects and sentiment, just like the chairman mentioned, talked about sentiments. Now, this sometimes this rate cut is less about the immediate dollar impact.
Yeah.
It's more about the signaling it is bringing forth.
Yeah.
So people should not just focus about the immediate dollar impact, but what does it signal? Now, when rates are being cut, inflation is tamed. Yes, they try to see as much as possible so that they control inflation, so that the economy does not go into recession. So the tightening cycle will surely over time become over, whether we like it or not.
Exactly.
So at that point in time, the Fed will have to look at how do we accommodate this trend that is now coming into play. We tamed inflation, but now they are used to it, and because of that, everybody is taking position, and inflation is trying to come back. How do we control this? So the market will always be dynamic. The Fed Reserve will also be dynamic, like I said. But if investors believe that rate cuts will continue over time, it will continue to cause bullish sentiment. More funds will be pumped into high risk investments so as to get high yield return, and the market will continue to remain bullish over time. So what will be the likely outcomes for the crypto space? Given the mechanisms that I've just talked about, there are certain outcomes that will come forth within the crypto space. Number one, just like Digital Mama talked about, short-term rally. Now, cryptos, most especially the big ones like Bitcoin, Ethereum, yes, they will see boosts. All coins will see boosts. Decentralized finance will skyrocket as investors rotate out of bonds. They move their cash from bonds, from treasury bills, move it to digital assets, and then in a short time you will see a bullish market within the crypto space. However, because rate cuts change expectations, they change liquidity, they change funding costs, traders will try to anticipate moves, and because of that, it will increase volatility in the crypto space. You may see sharp swings, both up and down, because there are new sells, there are new buys, there are new highs, there are new dips in the market, so there will be increased volatility. Like I rightly mentioned also, there will be potential weakening of the stable coin yield income, because stablecoin issuers may get squeezed because the interest that is coming now is reduced. So because they often use, I bet you they often use treasury bills or similar incomes to back up operations or rewards. So lower rates will reduce their income, and so therefore, once income is reduced, their potential yield income also becomes very, very weak. And also, there will be pressure on projects that depend on high borrowing costs. Some part of crypto and DeFi depends on the spread, okay, and also depends on the yield curve, how or high yields on how the higher the collateral, the higher the yield. So there will be pressure on projects that depend on high borrowing costs, because the spread of these projects will compress, and then the borrowing cost or the yield will on treasures, as they drop, they also will tend to try as much as possible to see how they can compress borrowing costs, because the borrowing cost is now low. They will try as much as possible to see that they don't give out much within the crypto space for a lower yield. So they try to, as much as possible, to strike a balance between the borrowing cost and the return, even onto them, because they are in business. They are out to make money. So projects will tight margin models, and because of that, there will be pressure on the stable coin. So and finally, let me say this: for a longer term, we have what we call the tailwinds. If these cuts are sustained, it causes a broader easing cycle for the market. The market will ease. The cryptocurrency market will ease. Why? Because there is a huge inflow of funds into the market, and the market will ease much more than being so tight, because the rate cut is taking a longer period of time. We call it the tailwinds because there is more liquidity, there is higher risk appetite. People want to go to high risk investments, and then there will be weaker US dollars. So it will support a circular rise in the crypto market. So, but if cuts are reversed or inflation sparks into the economy again, the upside is dampened. You will see funds beginning to pull out massively from the crypto space and going back to the centralized market system. So that is the summary I can give you with regards to this.
Powerful, powerful. That's really insightful. Thank you, Mr. Moses Obaje. And finally, Mrs. Shipra Puluma, what would be your top 3 takeaway for anyone here looking to make sense of the Fed's next move in relation to crypto? Real quick, because we run out of time.
Well, bottom line, the quick win for anyone anticipating the next, Fed rate cuts, which might likely be towards the end of the year, around December or thereabout, is just get that information that you need. Since once there's a rate cut, the tilt of investors moves to the cryptocurrency world. Try as much as able to get knowledge on how to identify good gems so that you'll be able as well to key in, and then maybe you'll be lucky to experience financial freedom in this space. Because when you are informed, you know about all these things, you know how to navigate, you'll be able to enter the market, have a good entry point into the market, and then when to leave the market as well. Thank you.
Thank you very much, Mrs. Shipra Puluma. With that, we come to the end of today's session. Thank you all for joining us today on Blockchain World 2.0. We have learned that when the US Federal Reserve cut interest rates, it is not just America that feels it. The ripple touch crypto markets everywhere, including right here in Africa. A big thank you once again to our speakers, Mr. Moses Obaje, AI Prof, and Mrs. Shipra Puluma, our digital mama, for breaking it down so clearly. And of course, our gratitude to Diaspora Digital Media, DDM, and our sponsor, the Digital Assets Management Academy, DAMA, for making this program possible. Remember, the future of money is global, but the decisions we make locally will shape how we benefit. Stay curious, stay informed, and see you next week for another powerful session of Blockchain World 2.0. Thank you all, and goodbye.
Thank you, Mr. Ibrahim, and to all our listeners. The best place is Body Scan AI. That's the last information I will leave for the audience. Bye and out. Thank you.
Yeah. I see someone. Yeah.
Body Scan AI is just it. Because we are still at the lowest cap ever. Just key in and look at the long term. Thank you.
Thank you, our digital mama.
Thank you, everyone. God bless us.
Thank you very much. Greetings from LOP. Thank you very much.
Thank you very much, sir.
Thank you very much.
Thank you so
Greetings
much.
from 24 Digit King.
Very instructive and educative. Thank you.
You're welcome.
Thank you very much. Great presentation. Thank you.
Bye and out. Thank you.
Okay, bye.
Bye-bye.
Cheers.